So when like your clients were or are considering where to invest, like there are probably several asset classes, like maybe real estate is a big one with athletes. So kind of how do you help them compare like where to put their money? And you talked a little bit about it with your athlete, but yeah, it would be great to hear more.
Sure. So I think that there's like kind of like think of a continuum of where you can put your money, right? And the big thing between this end of the continuum and that end, it's liquidity, right? Because I know on this end, I could buy a stock or a bond or a fund, and I know that I'll get a return, but I could also get my money back immediately, right? And so on this end, the furthest to the left is bonds and CDs, right? Like there, maybe you're getting a rate of return that's 3 or 4 or maybe even 5%. I then take a step to the right. Now I'm looking at stocks. There, I'm hoping to get a return that's anywhere from 7 to maybe 12%. I then go to the all the way to the right. I've got businesses, right? Like over here, I know that I can hopefully make, I mean, when I'm doing a franchise deal, the minimum I want to make is 30% because I know I could get 12 over here, right? So I want to get 30 or better because that's going to compensate me for the risk I'm taking. Like when I go into a business, I know I can't get my money back immediately. And so I'm giving up liquidity in exchange for a return. But I also know on this far end of the spectrum, I'm dealing with an active business that requires a lot of my time and effort. And I want to be paid a premium because of that. Most franchise businesses, the biggest assets, yeah, there's a lot of financial capital that goes in, but it's the people that really determines your success or failure. And so I know that there's more work involved, but I also know that the potential for returns a lot higher. I know if I go into a franchise, I can't necessarily do that well while also, doing something else really well. Like I understand that it's going to require my time. Franchises aren't typically like it's not like, excuse me, it's not like something I could just buy and set it and forget it. It's not like I can truly be an absentee owner. I may be able to be like a distance owner. Like like me, I'm an owner from a distance. Like I live in the great state of New Jersey, but my locations are in Maryland and in Indiana. And, I come to visit them maybe every 3 to 4 weeks, but I'm not there every day. I'm not, working in the register every day. And the business doesn't need me to be doing that. So that's the continuum. But in the middle there is real estate. Real estate, like if I expect to get 7 to 12 on the stock market, my hope is to get, call it 14 to maybe 20% or 14 to 16% on the real estate side. And if I'm doing that in private markets, meaning I'm buying a home or an apartment building or an office building, I'm probably having to add a lot of leverage to that, right? Because I look at what's called a cap rate in real estate is another way of looking at your rate of return. And cap rates are like 5, 6, 7%. But if I lever up, if I go out and get loans, I could double or triple that. So, real estate is a great thing for the person that wants to be passive. It's a great thing for the person that does not want the headache of dealing with 20 employees. But I also know that in real estate, yes, I'm giving up liquidity, but I'm not going to probably make 30% or 40%. So I think, it's wise to have a range of different investments. Even if you decide you want to be a franchisee, you definitely need some money on the liquid side. You need some stocks, you need some bonds. And hopefully you don't put so much money into the franchise that if it goes poorly that you're in the poorhouse. Like hopefully you can structure it where you put just enough to get into that business. And the great thing is like with franchising, like you could put up a couple of $100K and make back a couple $100K. Like you can really, because of the leverage, like the 30% number I gave, that's kind of without leverage. But if you lever that up, I mean, you could be doing way better than that. So, I think you could possibly have all those things. You could have your stocks and bonds, which are really truly passive and liquid. You can have your real estate, which is passive but illiquid. And then you could have your franchise, which is all the way to the right, which is illiquid and active. And I think if you had a range of all of these different things with a little bit in each, I think you'll